Peter Eliades with you, Thursday, January 9th. Pack up the babies and all the old ladies, as Neil Diamond said. Bring them here, sit them in front of the TV, because anyone that's interested in the stock market should be watching this. I'm beyond excitement here. In fact, I just did a great 15-minute update for you to watch. Discovered my microphone wasn't on. That's how excited I am. Usually I don't make mistakes like that. This is very exciting. I know I get excited from time to time on my updates, but this is really over-the-top excitement, and there are a lot of reasons for it. Are we at a major top right here and now in January of 2020? Well, I can give you some good reasons why we are not, and you're looking at one right now. This is the daily advanced decline line of the New York Stock Exchange. It went to a new all-time high today, right up in here. That's a new all-time high. Major tops in the market are not made with new all-time highs in the daily advanced decline line. That's pure and simple. It may have happened once or twice in history. In 1976, you could make an argument something like that happened. And in 1968, you could make an argument in December something like that happened. Weren't exactly analogous, but very similar, and they were important tops. But this is an important reason why we probably are not at a major top. The second important reason is that we have new 52-week highs today were 241. Now, that's not the highest of the last 3 or 4 months, but it's pretty close to it. The one that was higher was on December 20th. We had 272 52-week highs. So you can make an argument that there was a slight negative divergence there, not the same number of 52-week highs at that peak as we saw at this one. So, but take those two reasons why we're not at a top and throw them aside for now, because I'm going to show you a few reasons why we might be. Number one reason why we might be, sign of the bear, 16th day today. We need 2 more days, Friday, tomorrow, and Monday. AD ratio, daily AD ratio, New York Stock Exchange below 195, above 0.65. Will we get it? I don't know. Whether we get it or not, we still have a lot of things working for us for a market top. But boy, it'd be really nice to see a sign of the bear given. So that's a possibility, or very real possibility. I can't tell you how rare it is in and of itself to get 16 consecutive days with those parameters. We almost did it in late November. We got up to 15, and then we blew it out of the water the next day, so it didn't count. Okay, so the sign of the bear is a good reason. Now, most of you that have been following these updates will know a reason why we could finally be at an important market top, and that relates to this chart right here. Wow. Look at this chart. First of all, let me remind you, back in December of last year, look at this projection box. This sharp decline that everyone panicked in, look at where it stopped, right within the projection box. And from there we had this fabulous rally. The rally broke above the offsets. It gave projections 29,607 minimum upside projection. Now, it almost got invalidated in here, but at no time did prices, the midpoint of the bars, get below both of those offsets for the Dow. If they did, it was like 1 day, but I don't even think it was 1 day that they did it. So the projection remained in effect. It was not invalidated. It remained in effect here when we told you, no, we hadn't reached it. It remained in effect here when we said, no, we haven't reached the minimum Dow projection yet. It remained in effect here on the first day of the new year, on January 2nd, when we got really close. Look what happened today. Now, I'm not going to cheat with you. I'm going to show you exactly what it looks like in terms of a close-up. Take a look at this. And you can say, oh, well, we didn't make it yet, Peter. Look at the little space in there. Well, the little space in there is today's high was 28,988.01, and that lower part of the window, as we just discussed, comes in at 29,607. You're talking about 18 Dow points away. That's the equivalent of 1 or 2 S&P points. That's how close we are. So for all practical purposes, finally, after this long a wait, The minimum upside projection for the Dow has been met. And because that happened, now you could start talking about a major top in the market. So, the Dow projection almost perfectly met the lower end of it, mind you. But watch this. This is spectacular. And it goes all the way back to 1963, I think. But there are a couple of things we want to show you here. We'll quickly scroll forward to where we are today. This is today's market action right here. This was the high in 1919. Behind the times, Peter. This was the high in 2018, January of 2018. Okay, there's two periods I'm interested in here. This final move from August of 17 into this real blow-off to the upside. Why do we call this a real blow-off? Because those of you that follow the RSI indicator that measures market momentum, the RSI at this high in January of 18 at 86.69. Let me make sure of that now because I don't want to give you a wrong number. The RSI reading at that peak was 86.69. That was one of the most highest. That was one of the highest momentum readings in history. Can you tell I'm excited? Yeah, talk straight, Peter. That was truly one of the highest momentum readings in history. How do we know? Well, let me show you. Let's do this. That broad wine-colored line that you see is the 86.69 reading. You tell me when you see a similar reading going back for the last 40 or 50 years. You came maybe a little bit close a couple of times, came close there, nope, didn't reach it. Came really close here a couple of times, didn't reach it. We're all the way back now to 1989. So I'm going to go back quickly the rest of the way because the bottom line is you never reached it. We never got up to that high, that blow-off high in the last 50 or 60 years. That's what kind of a blow-off we saw coming into the 2018 high, okay? Huge upside momentum reading. Now, let me ask you something. Do you see any similarity in that last move up to that high? Let's say from the August of 17 high up to the 2018 high, that blow-off high that we saw, one of the highest momentum readings in history. Well, let's go forward to August of 2019, this low right here, and the final blow-off move. Now, you did have a big move up, then a nice pullback again, but this final move up, this part of it began in October. But you can argue after a sharp decline into the early August low that this final blow-off move looks quite similar on the chart to this August to January move here. By the way, I don't know if I mentioned it. I did on my first update that I did where the microphone wasn't on. This is attributed, these patterns are attributable to Garrett Jones, who was an associate with our money management thing, and he's an excellent technician in his own right. He's one of the best. Garrett knows what he's doing with both cycles and other technical aspects of the market. He's the one that pointed this out to me this morning. One other thing I want you to look at. After this huge move up, you had a very sharp move down. Then you formed a high right in here. That was in March of 2018. Another high in September of 2018. And then we see a final move above all the highs to a new all-time high. Take a look. Can you see with your eye that a line drawn from this high through this one might take us somewhere into this territory? Well, let's not guess anymore. Let's take a look at those patterns and that trend line. And here it is, all dressed up with everywhere to go. What a thing of beauty this is. Here we go. Should be able to see that whole pattern. Okay, what do we have here? Well, I just mentioned the trend line. Here's the trend line, March of 2018 through the high of September of 2018. Guess where it is today, folks? Bingo, right where we are today. Now let's look at these August to January blow-off moves. This is the one from August of 17 to January 18. took 109 trading days. This line that you see going from the low to the high in 2018 is exactly, I mean exactly, the same line as the green one you see here. Exactly the same in terms of slope. In fact, let me prove that to you. Let me replicate this line right here. There's the slope, an exact replication of the slope. Let's bring it over here. Do you see a difference in that line? I don't. It's exactly the same line in terms of its length and in terms of its slope. So we can erase that one. What are the similarities? Well, this one was 455.52 points from the August low to the January high. Let's do the same thing over here. This August low was, as you can see, take a look at the third line up in the data here, if I can get right on it. The low, 28/22/12, August 5th, 2019. Let's play with it and do exactly, pretend it's exactly the same move as this one, both in terms of slope, in terms of time, in terms of points. Well, take the points, 452.52, add it on to the 28/22 low in August, you get 32.7764. What was today's high? Make sure you're on today, Peter. 32.7558, 2 points away from an exact match of the August to January rally here. Trading days, 109 trading days. Points, almost exactly the same. Slope, virtually exactly the same. So, what do we have here? We've got an exact replicated pattern from August to January, August to January. This one was the highest RSI reading in history. Now, this is important. Watch this. I hope I can come up with it quickly here. Well, that's not the one that I wanted to show you. Let me go back to this one here and go back to the RSI line again. Okay, this is important. This January of 18 high, which we just replicated currently, look at the RSI reading. You don't reach a market top when the RSI is up at 86, 87. What happens is you generally get a high reading, then a higher top, lower RSI, higher top, lower RSI. Well, welcome to January of 2018. Look at this. The highest RSI reading came on December 30th. You went to a higher high here, lower RSI, and today the RSI reading was 71.36. That's where market tops are formed after you get a divergence. Here's your divergence, which equal the same number in points and slope and number of trading days. If I look excited, I am. Please, don't just share it. Don't just be stingy with this update. Go out, tell all your friends, anyone that's interested in the stock market, to take a look at this update. See if they see the substance there that we are looking at. Please enjoy it. I hope you enjoyed it, but please circulate this update to as many people as you can, because it may turn out to be very important. Thanks so much for watching. Subscribe.